Good day, everyone. You're welcome to today's live stream. I believe you can hear me. If you can hear me, please drop a comment. If you can hear me loud and clear, also confirm you can see my screen. If you can hear me loud and clear, please let me know in the comment and also confirm you can see my screen. You're welcome. You're welcome. How has been trading this week? I hope it's been profitable. Let me know in the comment section. How has been trading this week? Can you hear me? Can you hear me? If you can, please drop a comment. If you have any question, any pair you want me to analyze, let me know in the comment section. If there's any pair you want me to analyze, let me know in the comment section. You're welcome, you're welcome, you're welcome, you're welcome. Let me know in the comment section. If there's any pair you want me to analyze, let me know in the comment section. You're welcome, you're welcome, you're welcome. Can you hear me? Can you hear me? Drop a comment if you can hear me. I want to be sure you can hear me. I want to be sure you can see my screen before I start the class. Let me know what pair you're considering trading today. Let me know in the comment section. If there's any pair you'd want me to analyze, let me know in the comment section. Okay, so let's get started. I want to believe you can hear me loud and clear. You can also see my screen, okay? So today is Wednesday, September 17th, and these are the major news that will be released today, right? We have GBP, Great Britain has released its CPI data, and we'll compare the forecast with the actual. The forecast was 3.8 and the actual was 3.8. So the value remains the same. It remains the same. Okay, so actual and forecast is the same. That is neutral. That's neutral. Then Bank of Canada rate statement released by 2:45 p.m. Nigerian time. Overnight rates will be released also same time. And by 3:30, Bank of Canada press conference will hold by 3:30 p.m. So we should expect high volatility on card pairs. And United States dollar federal funds rate will be released by 7 p.m. FOMC economic projections, FOMC statement, and FOMC press conference would hold by 7 p.m. This is a major news, a high impact news. So you should be very conservative if you're going to trade dollar pairs before this news. If you're going to trade dollar pairs before this news, you should be very conservative. Be very conservative. And by 11:45 p.m., New Zealand will be releasing its GDP data. The previous was 0.8, is negative 0.8. 0.3. So you're expecting a decrease from positive 0.8 to 0.3%. You should also be conservative trading New Zealand bears. Okay, so that is it for fundamentals. So let's go to the charts. So we'll start by looking at DXY. My bias for DXY still remains the same. Long time is bearish, but short term, I am bullish on dollar index. Okay, these are the areas I identified yesterday. I said I would love to see dollar pull back to these zones. And this is the area these are the areas I'll be considering selling. I want to see dollar pull back to fill this zone technically, okay? Technically. Okay, so that's my expectation on the dollar for today's market. Okay, so you can see what we had here. We had a fair value gap, so it's possible dollar will pull back to fill this fair value gap it's created here before going to fill those gaps. Okay, so dollar is likely going to come and fill this gap before going bullish. But if dollar breaks out from the low of this candle, we should expect more sells. We should expect more sells if dollar closes below the low of this candle. Okay, we should expect more sells. But right now, my bias is bullish for the dollar until it breaks this low. If it doesn't break this low, it is still bullish. It is still bullish. Okay, so let's see yen basket. So let's start with the daily time frame. Okay, so yesterday candle was strongly bullish. It was strongly bullish, and we had the liquidity of yesterday at the high. The liquidity of yesterday candle at the high of yesterday candle. And this morning they've swept that liquidity. They've swept that liquidity. So I will be looking for sales. Okay, the liquidity has been swept. Let's see where price is heading to. Okay, we still have a fair value gap here too. That price might go to fill. Okay, price might want to come and fill this fair value gap. Price might want to come and fill this fair value gap. Okay. Now, liquidity residing at the previous high. You can see the pattern we had yesterday. I think it was last candle for yesterday market. We had a shooting star, and this morning they swept the liquidity. So if a bearish reversal pattern forms on 4 hour, one can risk selling the yen. If a bearish reversal pattern formed on 4 hour after sweeping liquidity that was residing at the high of yesterday candle, one can look for sales. Okay, so I am bearish on yen for today's market. I am bearish on yen and I'm bullish on dollar index. Okay, I'm bullish on dollar index and I'm bearish on yen. Let's apply our Fibonacci. Let's see if yen is at a premium area now. Let's see. From this swing high to this swing low is above 50, right? Yeah, is above 50. So it's currently at a premium area. So if a bearish reversal pattern forms, then one can start selling. One can start selling. So it's either it comes fill this value gap, you look for your sales from this zone, or a bearish reversal pattern forms after price swept yesterday high liquidity. So let's see what's happening on 1 hour. Okay. So you can see New York, London, New York, Asian session. We had this price range in Asian session. You can see price was in a range. And what they've done this morning is to also sweep the high of the Asian session. They've swept the high of the Asian session. So price might drop. Okay. Price might just crash from that point. So let's say 15 minutes. Okay. So just wait for a bearish reversal pattern to form on 4 hour or 1 hour time frame. Then you can sell yen. I hope that is clear. So that is my take for yen. So let's look at other pairs. If you have any question, any pair you want me to analyze, let me know in the comment section. Good morning, Mr. Isaiah. Good morning. If you have any question or any pair you want me to analyze, please drop it in the comment section. Please give the video a thumbs up. If you haven't done that, give the video a thumbs up so that others can get to see this video. And if it's your first time joining the live stream, just subscribe to the channel so that anytime I come on live, you get notified by YouTube. Okay, so let's look at currency pairs. We'll start by looking at GBP USD. Remember, FOMC meetings host today. So, like I said, be very conservative if you're trading dollar pairs before the news release. Okay, be very careful if you're considering trading dollar pairs. You can see since yesterday, GBP USD has been in the range, and that's because of the major news that will be released today. That's the reason for the ranging markets. Okay, that's the reason for the ranging markets. And on GBP USD, liquidity that was residing at these previous highs has been swept. You can see all the liquidity residing at these previous highs has been swept. Okay, you can see also it has swept this liquidity. Okay, and we have this fair value gap here. So GBP USD might want to fill this gap. It might want to fill this gap before going bearish. Okay, you could look for sells after it fills this gap. Okay, and it has not swept yesterday high. It might sweep this high, then fill this fair value gap before it goes bearish. So this will be a very good area to consider selling GBP USD. You could wait for price to fill this gap before selling GBP USD. But let's see how the pattern that formed on 4-hour after the close of yesterday candle. Let's see 4-hour. Okay, so we had this pattern on 4-hour. Okay, so we had this pattern, though not a valid bearish reversal pattern, not a valid one. Let's see 1 hour. So you can see on 1 hour, we had several bearish reversal patterns on 1 hour time frame. You can see at this point, we had a shooting star, several bearish reversal pattern. And then we had engulfing candle here. You can see we had an engulfing candle here. It created a fair value gap. We had this fair value gap here on 1 hour time frame. Price pulled back, filled that fair value gap, gave us an engulfing pattern after filling that fair value gap, which is a bearish setup. So price dropped, and price has retested that level, tested it. This is the second time or the third time it's testing that fair value gap. So today they might still want to test this fair value gap because they know most retail traders would have executed sell after the formation of these candlesticks, and their stop losses will be residing at this high, and also this high. So they might want to sweep the liquidity residing at this high before going bearish. Like I said, my bias for the dollar today is bullish. Okay, so they might want to fill this gap before going bearish. I would love to see GBP USD come fill this gap. This is my expectation. I'd love to see GBP USD retrace back to fill one of these gaps. Once price gets into this gap, I see my bullish pattern, I will take a buy. These are the areas I would love to see GBP USD retrace into before going bullish. Okay, so I'm looking for sell opportunity on GBP USD. Sell opportunity before the news. Okay. If there's any pair you want me to analyze, let me know in the comment section. Let me know in the comment section. Euro USD. Okay, Euro USD, my bias on Euro USD. Let's start with the daily time frame. Yesterday was strongly bullish. Swept all the liquidity residing at this high. And after the close of yesterday candle, what pattern formed on the 4-hour time frame? If it's a bearish reversal pattern, then we should be considering selling Euro USD today. Let's see the pattern that formed on 4-hour. So you can see the pattern that formed on 4-hour. We had a spinning top on 4-hour time frame, spinning top. The next candle closed bearish. This is a bearish reversal pattern. one would only consider buying if this resistance is broken. So at the moment, the market is trading below this resistance it's created. Euro USD is still bearish. It is still bearish. You could only consider buying if this resistance is broken, or you wait for price to pull back. I would love to see Euro USD pull back to fill this fair value gap. This is based on technical analysis. Technical analysis. This is based on price action. Okay, so I'd love to see Euro USD retrace back to this discount area. This is where I would want to consider buying. But at the moment, I am bearish on Euro USD. I am bearish on Euro USD. If you have any pair you want me to analyze, if you have any question, drop it in the comment section. Drop it in the comment section. Okay, so let's move to the next pair. Which other pair? Okay, let's see gold. Let's see gold. Okay, so gold at the moment, I think gold is bearish. So the guys, buying gold at the current market price is very risky. If you buy gold from the current market price, for me, it's very risky. But what can we see on the chart right now? You can see yesterday, yeah, we had an angry man, and after the formation of the angry man, you see what played out here. After the formation of this angry man, we had liquidity residing at the high. The normal retail traders would have executed sell after the formation of the hanging man. So the first thing they did was to sweep the liquidity residing at the high of that hanging man. Every retail trader would have executed sell after the formation of the hanging man, and their stop loss would be at the high or a few pips above the high. So first thing they did was to sweep the liquidity before selling. Okay, now with the patterns I'm seeing on the chart, I think this will be the next target for gold. This fair value gap, which is at a discount area and which is in confluence with this resistance zone support, that could be the next target for gold. That could be the next target for gold. Now, at the moment, we also need to consider this fair value gap here, which is in confluence with this resistance zone support. You can see this resistance zone support, this fair value gap. Okay, so that's the reason for the rejection. This fair value gap, you can see there's a little rejection at this zone. This fair value gap and this resistance zone support is the reason for this rejection. Okay, it's the reason for this rejection. Okay, but if price breaks out from this fair value gap, if price breaks out from this fair value gap, then it's aiming for this fair value gap. Okay, personally, I would not advise that you sell from the current market price. If you want to sell, this is where you should have entered sell. This is where you should have entered sell. If you have not, if you didn't sell from this point, you cannot sell from this point. Your risk will be too high. The risk on the trade will be too high. So it's best, if I want to take a sell on gold, I will need to see price retrace. Okay, so you can see we have this fair value gap on 1 hour time frame. If I want to sell, I would love to see price pull back to fill this fair value gap. This would be a very good area to consider selling. Selling from this zone will help reduce your risk on the trade. Okay, this would be a very good area to consider selling gold. That's my take on gold. Okay, I'm still bearish on gold. I'm still bearish on gold. I'm still bearish on gold. Okay, I'm still bearish on gold. But like I said, if you want to sell gold, wait for price to retrace back to a premium area where we have the fair value gap. And this should be your target. Sell from this zone target. This should be your first target. Okay, once price fills this zone, there's a probability that gold might just keep buying from that zone. Okay, so right now you shouldn't sell, don't buy. Sell from this zone, look for your buy pattern from this zone. And if price breaks out from this zone, then it's coming for these lows. These lows, you can see we still have fair value gaps here that needs to be filled to. Price breaks out from all these zones, then it's coming for the next fair value gap. That's my take on gold. Okay. Short term for today's market, gold should be bearish. Technically, please take note. Technically, there are several major news that will influence price movements. Several major news have released today that will influence price movements, and that's why I advise that if you're executing any trade before the major news is released, be very conservative. This is not the day to go all in. This is not the day to risk all. If your maximum daily drawdown is $50, don't risk more than $15 before the news. Don't risk more than $15. 30 to 40% of your daily drawdown is what you should use before the news is released. That's my advice. If you want to trade before the news, that's my advice. Is there another pair you want me to analyze? Let me know. We've looked at GU, EU, and gold. Which other pair do you want me to analyze? I would suggest you look for trade on Euro or C. I see a good setup. And we don't have any major news for Euro or C today. Euro and Australian dollar, there are no major news. So if you are scared of the news, just trade cross-currency pairs. And on Euro or C, I shared this with my student last night. I shared this with them that Euro or C, though it's bullish, let's start with the daily time frame. Though it is bullish, though Euro or C is bullish, I'd love to see it pull back to a discount area. We cannot buy from this point. Okay, we cannot buy from this point. You can see that this is 4-hour time frame. We had this fair value gap on 4-hour time frame, and price just filled this fair value gap. You can see price just filled this fair value gap, and also yesterday candle was strongly bullish. So what they've done this morning is to sweep the liquidity. I shared this with my students last night that you wait, if you want to sell, wait for price to sweep the liquidity residing at the high, which they have achieved this morning. So if you go down to 4-hour, now, if you had wanted to buy Euro or C, this is where you should have bought. This is where the buy movement started from. If you had missed this first opportunity, you had the second opportunity. This is where you should have entered the second trade. If you had missed first opportunity, second opportunity, if you have missed this second opportunity, you had another opportunity to buy from this point. So if you have missed the first, second, and third opportunity, you cannot buy from this point. You cannot buy from this point. Now they've swept liquidity, and after sweeping liquidity, what pattern do we have here? We have a spinning top. We have a spinning top. So if the current 4-hour candle closes bearish, there is a high probability that Euro Australian dollar will sell, and it could come fill these fair value gaps. Euro Aussie could come fill this fair value gap. Remember how price moves. First thing price does is to sweep external range liquidity, and after sweeping external range liquidity, it goes back to fill the imbalance, fair value gap, or liquidity void, which is an internal range liquidity. The fair value gap, the breaker block, the mitigation block, all these are internal range liquidity. So what have they done this morning on Euro Aussie? They've swept external liquidity, which is residing at the previous high. The previous high and previous lows are external range liquidity. The previous high and previous lows are external range liquidity. So you wait for price to sweep external range, then expect it to fill the internal range liquidity. So that's my take. So you could look for sell opportunities on Euro Aussie opportunity. So if you go down to 15 minutes, I think it's just, you can see we had this fair value gap on 15 minutes time frame. And what happened? Price filled, you can see price filled the fair value gap. Can you see price filled this fair value gap? And there's a strong rejection. You can see the pattern that formed after price filled that area. And the market is currently trading below this fair value gap. This is a bearish setup. This is a bearish setup. Okay? This is a bearish setup on Euro Australian dollar. There was a shift in market structure at this point. This is 15 minutes time frame. You can see there was a shift in market structure at this point. Now that shift in market structure, price is expected to pull back to fill the imbalance it created before going bearish. So that is what I see on Euro Aussie. That's what I see on Euro Aussie. You have any question, let me know. Is there any other pair you want me to analyze? Let me analyze GBP, JPY before we end this class. If you have any question or any pair, please drop it in the comment section. So GBP, JPY is bearish at the moment. Remember, yen is aiming for a fair value gap. Okay, yen is aiming for a fair value gap. So GBP USD is bearish at the moment. Let's start with the daily. Okay, so my take on my bias for GBP JPY today is bullish. So they've swept liquidity that was residing at the low of yesterday market. They've swept that, and let's go down to 4 hour. After the close of yesterday market, what pattern do we have on 4 hour? Let's see. Okay, so we had inverted armor and armor, inverted armor and armor. Okay, so let's see. They want to sweep this low. Maybe they want to sweep this low. Okay, they might sweep this low. Okay, let's see. I want to sweep this low before going bullish. My bias still remains bullish. I would love to see GJ pull back to fill this gap it has created here before going bearish. I'd love to see it pull back. Okay, so if 4 hour candle closes bullish, if a 4 hour candle closes bullish, that would be another opportunity to buy GJ. Let's see 1 hour. Let's see what's happening on 1 hour time frame. Wow. Okay, so there's a high probability they might sweep this low. You can see they might sweep this low. So after sweeping this low, you look for buy opportunity. You look for buy opportunity. Okay, we still have, let's see this fair value gap here. This gap was filled at this point. Yeah, this gap was filled at this point. So, okay, this gap was filled at this point. So they might come for this low. They might come for this low because after price fill this fair value gap, the normal retail traders would have bought and their stop losses will be residing at this low. The normal retail traders would have bought and their stop losses will be residing at this low. So they might come for this low before going bullish. That's my take on GJ, and I think that will be all for today's class. Any question? Any question? If you have any question, let me know in the comment section. Any question? Do you have any questions? Is there another pair you want me to analyze? Emmanuel, hey, not sure you're just joining the class. We've analyzed gold. We've analyzed gold. Hey, not sure. We've analyzed gold. Let me just revisit it. Let me revisit gold. So like I said, gold is bearish. My bias for gold is still bearish, but this is not the right time to sell gold. This is not the right time to sell gold. You should have sold gold from this point or after the formation of this candle. This is where you should have sold gold. If you had missed this opportunity, You had the second opportunity to sell good from this point. So if you have missed this move, you should wait for price to pull back to this zone, this fair value gap. You can see this fair value gap. Wait for price to pull back to this zone before you sell gold. Okay, so I would love to see gold come fill these fair value gaps. This fair value gap, this is where open gold is going to come fill. Okay, that is my expectation on gold. You can see this fair value gap, and we also have this fair value gap. So I would love to see gold come fill these gaps. So if you're considering buying gold, you should wait for price to come fill these gaps before you go bullish on gold. Right now, gold is bearish. Like I said, it is not the right time to sell. Don't sell now. If you want to sell, wait for price to pull back to this zone, then you sell. Or you wait for price to get to this zone before you look for your buy pattern. I hope that is clear, Emmanuel. Any question? Any question? Any question? So it appears there are no questions. So that will be all for today's session. I appreciate you all for your participation, Mr. Isaiah, Mr. Clement, and Mr. Emmanuel. I appreciate you all for your participation. I wish you all a profitable trading day. Remember, FOMC. Today is FOMC. Today is FOMC. So be very conservative. Don't over leverage. Don't over trade. Don't over leverage. Don't over trade. Be very careful. Be very careful. Calculate your risk before you execute the trade. Know how much you're going to lose before you execute the trade. If you can't define the risk, don't take the trade. If you take the trade, you would be gambling. And as a gambler, you keep losing in the market. You must have a well-defined strategy to make money in this market. You must have a well-defined strategy. If you don't have a strategy, get my course on Forex trading. In that course, I teach you my unique trading strategy. Get my course. Okay, you can still get the course today for 10,000 naira. I'm planning to increase the price to 15,000 naira. I was supposed to increase it on the 15th. But some person sent me a message that they don't have the funds, and hopefully before weekend, they're going to get the course. That's why I just left it at 10,000. By next week, the price will go back to 15,000 naira. So if you don't have a strategy, if you're a struggling trader, those are the people I created this course for. If you have a model you're trading with and you're profitable with that model, you don't need my strategy. You don't need my strategy. This strategy was created for those who are struggling, those who are new to trading, who are interested in learning a simple strategy, which is what you need as a beginner trader. You need a simple strategy to make money in this business. Those are the people I created this course for. Okay, so if you fall into that category, get this course. Get this course. You need it. You need it. Okay, get it while it is affordable. It is cheap and affordable right now. My price is to take the price up to 50,000 naira. 50,000 naira. So please get it now. That is cheap. Okay, so get it now. The max price action strategy is what you need to make money in the market. Those who have bought it can attest to it. Those who have bought it they've confirmed. So how profitable the strategy is, how simple it is, and how profitable it is. So if you don't have a strategy, get this course today. Okay. All right, guys, do have a wonderful day. For those of you in the community, the conversation continues. The community, if you see any good setup, if I see any good setup, I'm going to let you guys know. If I'm going to take any trade, I would also notify you guys on the group. You know how we do it. Bye for now.